Welcome back to my series on reviewing um, Central Bank of Nigeria's MPC briefings over the last 10 years or so. So I'm back to watching these, and hopefully I can do the 7 minute summary here today.
In 2014 to 3.5% in 2015, although with considerable variation across regions and major economies. The softening oil prices have continued to support an uptick in growth of oil imported countries, the dampening growth prospects in major oil exporting countries. Overall, economic activities have gained some traction, particularly in the United States and the United Kingdom, underpinned by sustained monetary easing, ebbing fiscal
I'm going to
consolidation,
pace it so it talks
improvements in
faster.
housing market conditions, lower financing costs, rising private consumption, and increase in real household income. Elsewhere, low commodity prices continue to put higher aggregate demand, in addition to creating conditions for accommodative monetary policy, especially in Japan and the euro area, where recovery appears to suffer severe setbacks due to structural bottlenecks and the threat of deflation. For the eurozone, however, and weakening domestic demand.
So, as usual, the beginning of the briefing is, in fact, um, a review of global events in the financial markets. He has mentioned Japan, the euro area, what they're experiencing, if it's a recovery, and then of course Europe, America. So yeah, that's the first 5 or so minutes of the speech.
However, I will say that recent policy stimuli by both government and the People's Bank of China would help unwind the excess capacity and strengthen the financial system with ultimate goal of restoring growth to the historical path in the long run.
So this was 2015 May 19, 2015, the 101st MPC briefing by Governor Godwin Emefiele of the CBN, saying that the GDP growth rate at the time would be around 5.2 or so, 5 point something. And yeah, we're seeing numbers in 2026 of circa 4.9, 3 point so expected, GDP growth rate. So around the same figure.
The sector remained the main driver of growth in the first quarter of 2015, recording
As
5.5%.
always.
The key growth
So in this speech, the CBN governor says, with the conclusion of the 2015 elections and reduction in the activities of insurgents, the slow pace of growth was expected to reverse, and now we were going to have, some progress, much faster progress going forward in the second half of the year 2015.
that the year-on-year headline inflation crept upwards from fourth consecutive month from April 2015. The inflation rate rose from 8.2% in January 2015 to 8.5% in March and further to 8.7% in April of 2015. The increase in headline
inflation rate around that time was between 8.2 to 8.5 and then to 8.7 across 2 or 3 quarters, if I got that right.
in April reflected increases in both the core and food components. Core inflation rose to 7.7% in April from 7.5% in March, while food inflation increased to 9.5% from 9.4% over the same period. The committee noted that the uptick in inflationary pressures year to date was largely traceable to transient factors such as high demand for transportation, food, and energy, especially in the period around the general elections, as well as
I'm going to try and be smart and rephrase what you just said in this part of the statement, part of the briefing. He's saying that there are some conditions that are restricting the Monetary Policy Committee or the central bank as a body from making some changes to the trends of some metrics, but now they are now reversing that power or hoping that the fiscal team would be able to do something on their end. I hope I'm right with the way I rephrase that.
broad money supply increased by 1.8% in April 2015 over the level at end of December 2014. When analyzed, M2 increased by 5.39%, which is lower than the growth benchmark of 15.24% for 2015. The modest increase in money supply reflected the growth in the net domestic credit of 9.66%. Analyzed, net domestic credit grew by 28.98% over the end of December 2014 level, which was within the provisional benchmark of 29.3% for 2015.
From his statement here, The federal government's borrowing in 2015 around May increased by 177% um, annual rates based on what he has just said. So, what government borrowed in 2014 was more than double what they borrowed in 2015.
Money market interest rates were relatively volatile, reflecting the fluctuation in liquidity in the banking system. Average interbank call and open buyback rates, which opened at 11.92 and 10.75% on 2nd of March 2015, closed at 15% and 13.26% respectively on April 17, 2015. Average interbank call and open buyback rates for the period were 19.02 and 17.45% respectively. Committee noted a modest improvement in equity segment of the capital market during the review period. The Austria index rose by 9.3% from 31,744.82 on March 31, 2015 to 34,708.11 on April 30. Similarly, market capitalization increased by 10% from 10.72 trillion to 11.79 trillion in the same period. However, relative to end of December of 2014, the indices increased marginally by 0.1 and 2.7% respectively. The recovery in share prices, particularly in April 2015.
Now we're at the part where we're talking about exchange rates. At the Bureau de Change is around 225 naira to the dollar, and then selling is 217.59 to the dollar.
The average of 216.75 naira to the dollar. This represented an appreciation of 7 naira 50 kobo for the period. The stability and modest appreciation in the two markets was largely due to the closure of the official Dutch auction system market and the modified two-way quote trading at the interbank segment of the market. Gross official reserves rose from $29.34 billion at the end of March 2015 to $30.05 billion on May 15, 2015. The committee's consideration. The committee noted the salutary effects of successful conduct of the 2015 general elections on the macroeconomic environment. The committee expressed optimism that confidence and goodwill arising from the successful elections will stem the state of capital reversals, reduce pressure in the foreign exchange market, and stabilize the financial market both to retain the current tight stance of monetary policy. One member voted to increase the CRR on private sector deposits from 20 to 25% and retain CRR on public sector deposits at 75%, while another member voted to retain CRR on private sector deposits at 20% and increase CRR.
One member of the MPC voted 75% CRR, and the rest of the team of the committee voted 20%.
Of public sector deposits from 75 to 100%. 9 members voted to harmonize the public and private sector CRR at 31%. 2 members voted to remunerate a portion of the CRR. All members voted to retain all other decisions taken at the last meeting of the Monetary Policy Committee while improving the implementation of the CRR regime. Consequently, the MPC voted to 1. Retain the NPR at 13% with a corridor of plus or minus 200 basis points around the midpoint. 2. Retain the liquidity ratio at 30%. And 3. Harmonize the CRR on public and private sector deposits at 31%. Thank you all for listening.
So that's the briefing. I think there were questions from the media, but the much I took from this was retaining the CRR at around 25%. Let's look at the question.
Elijah Rambo from London. The CBN is in the FX trading restriction, and it's a wonder. And secondly, Nigerian companies are increasingly complaining about access to dollar currency restrictions.
Another question from another journalist.
Is there any plan to remove some of the capital control you put in place last year? And secondly, what are the impacts which question is on the education?
I didn't get that.
So I would like to clarify why
Again, I didn't get that. The fourth journalist now.
What the organization just mentioned
Okay, I guess we'll just leave it at that, and then hope we'll have a better recording next time. Thank you for watching.